Alright, recap for the October 30th Asia session on gold. Overall, high time frame bullish, high middle time frame bullish, middle time frame, I'd say bullish as well, but low middle time frame kind of range bound. And we opened for the day, pretty much just drove bullish. Took this high. At the time of trading this session, I was kind of interpreting this as the high time frame, this as the high middle time frame, and that is the middle time frame, but doesn't really matter. The structure's there regardless. Looking back, I could have considered this the high time frame. That's a solid day's worth of price action, and then high middle, but you know, it doesn't really matter. It's the structure's there. So yeah, open, immediately pushed bullish. The narrative I was kind of working with, and it's nice when candle behavior and the market structure narrative both kind of make sense synergetically, if that's even a word, but I was kind of working with top wick on the 4 hour before pushing bearish for the remainder of the 4 hour to create the bottom wick on the daily before potentially retracing. Obviously, if we look at the kind of higher time frame trend, you know, you'd kind of expect a pullback to that general area, but that's where you reach a point of irrelevance when you're trading the next few minutes. The fact that you kind of expect that to overall happen over the next, you know, high middle time frame doesn't really matter. We have this relatively high time frame structure here. Just looking to take hopefully a buy that was within a natural area of adherence with high middle / middle time frame structure. I was hoping we were going to open and just immediately drop bearish, overextend relative to the middle time frame, of course, and I'd get a quick buy scalp. Alright, so we opened for the second hour of Asia, immediately pretty much just drove bullish. Did I potentially overlook sells in here? Maybe, yeah, but I just really liked our overall bullish direction, and I was considering sells if the 15-minute candle opened and miraculously came up, swept these highs, and we got a really nice reaction. But that just didn't happen, and we were already kind of deep within this move, so I wasn't going to take anything. Alright, so eventually we did end up pushing bearish. It took a while to unfold, so I actually hopped off here. But later on, once I saw that we were moving into an area that I'd like to take a trade off of, hop back on and set the if-then premeditation that if we overextended into this kind of 4 hour level area, which is also probably more importantly so as well, just a really logical area of adherence with our overall external structure, then I would take a trade off of a reaction, provided we had room to move low time frame wise, right? Within our most immediate structure, we had room to move. That's probably the most important part of the trade, along with the fact that in a sense, it's actually a continuation, depending on how you look at it. I mean, of course, it's the counter trend trade, it's technically a reversal, but we've simply just been, oh shit, that's not the tool I wanted to select. We've been pushing and pulling all through here, right? We pushed down really strongly into a 4 hour level. At least one of the most major confluences of this trade is just the fact that I'm expecting price to kind of continue what it's been doing. On top of that, I'm stacking the fact that we have a higher time frame level. We're at these lows. We're obviously very overextended relative to the middle time frame. We are within a very, very, as I said, natural, logical area of adherence with that overall external structure. And we have room to move. And of course, I'm waiting to actually see a reaction. I'm not just completely blind firing this. You can use the seconds chart, you can use the tick chart. Yes, it's a reactive entry, but there's always a shift to some degree. It's just a matter of what time frame it's on, and where I'm taking a trade that only lasts a couple minutes. I'm just looking for price to continue what it's doing and stacking all of those other reasons that, well, not only that it should continue doing what it's doing, but also stacking for potential that we are actually going to get a shift off of this area, which obviously there's a greater chance that some of a move will happen than the entire thing. So really all my trades is I'm stacking a bunch of reasons that a 400 pip move or something like that will happen, and then I'm taking like 40 of those pips. That's literally all I'm doing. But yeah, just to reiterate, most importantly, we have room to move, and it's pretty normal relative to this movement as well. We're just kind of getting pullbacks. So yeah, also something to note is the 12 a.m. candle opened, immediately drove bearish into this area. Our initial reaction on this 12-13 candle was a little bit slow, waited for a retest, and we got a TVS, or a tick volume shift, off that retest, and I immediately entered. So got a really favorable RR entry, which is an upside, of course, to trading more reactively. Right, I hardly needed to hold this, nor did I really want to, because it is obviously counter trend. But yeah, I was really happy with that. Alright, now if you watch till the end of that, here's some sauce. By far the easiest way to be stopped out trading counter trend, at least for me. I've done this time and time again, and it's reflected in the journal. I know to avoid this trade. By far the easiest way to get stopped out is trading this in-between shit, where you're not waiting for a full progressive, like, low middle time frame shift and then shift within a shift when trading against a directional middle time frame. But you're also not trading the reaction that fills the immediate move. You're not doing either of those. You're trying to execute on this in-between shit where you get a little 1 minute structure shift, right? We have a type 3 here, but the shift already fills the previous move, and then you're trying to take a continuation of that low time frame shift, but the shift has already done its job, move filled, and your stop loss is just going to get blown through. So yeah, just avoid the in-between shit, guys. You either need to be decisive and act quickly and trade with the intention of filling that immediate move, of course with other confluences involved, right? You want the expectancy that it will probably break, which here it didn't quite yet. Eventually it did, but yeah, you're either trading that immediate imbalance, or you're waiting for, right, a full progressive shift where this kind of dies out. You know, you get a shift and then you get a shift within that shift, and you're entering off of that, and you're really just trading this structure, probably taking profit at a previous high. But it's one or the other. It's not this in-between shit where you're taking a continuation of a trade that, or a continuation of a move that already filled the previous, and it just doesn't make sense. It's really just trading against the current of the market. So yeah, hope that helped.